Welcome back to Trading Hour. Well, the brief respite that we saw from the selling pressure, we are seeing some more selling has actually emerged after the recovery that we saw. The selling is especially seen across the pharma pack. Have a look at names like Sun Pharma, Cipla, even a name like a Lupin, that came out with its results yesterday. These stocks are seeing selling pressure. But as you can see, the important mutual fund data for the month of January is out. The small cap inflow has actually gone up on a month-on-month basis.
So small cap has gone up, mid cap has gone up, large cap has gone up. So the difference is this time thematic funds have seen a big, there have been lesser inflows into thematic funds compared
also could
to
be explained by the lack of new fund offers.
NFOs had also come down in the month of January, given the volatility that we had seen in the last couple of months. January in particular was a very, very volatile month. We had the budget, we had the US elections. So NFOs were also on the lower side. But that said, the overall inflow at 39,000 plus versus 41,000 plus on a month-on-month basis is still a very strong inflow into the net equity, into the net equity funds. And it just shows that, retail investors have sort of matured and they're able to weather the volatility storm. But we have Mohit Gang, CEO and co-founder at Moneyfront, now joining in. Mohit, morning. Thank you for joining in. Early numbers, but your first take?
Hi, Reema, good morning. Yes, the numbers have just come out and honestly, it surprises me a bit, but I think it also gives me a lot of confidence to see that the flow into the mutual fund categories have not stopped. 39,000 plus crore in equity after a strong month of 41,000 odd crores. It's a massive number by all means, right? And given the kind of volatility which we have seen in the markets for last one and a half odd month, I was hoping that the numbers will ebb a little, but they haven't, which shows the kind of confidence which people have in the Indian financial system, in the equity markets, and which also shows that the long-term investor is now matured enough to withstand such volatility and is willing to put in more money at lower levels if he's confident. So I think all in all, very good numbers which have come out. And the numbers are a bit surprising, but I think that's a positive surprise to take.
So positive surprise from the numbers. Mohit, especially in February now, given the fact that post-January, we have seen quite a bit of a sell-off as far as markets are concerned. What will be the numbers that you will be looking at? Apart from the SIP numbers that we track monthly, where do you think there could be some moderation as far as inflows are concerned?
Look, honestly, I'll be very keen to watch out the SIP number at around 26,000 crores. I'm quite keen to see what is the net SIP inflow, right? So the gross SIP inflow to me is a little irrelevant data because that keeps showing an uptick month on month. But I'm just keen to see what are the kind of SIP closures. And we were last month also at a fairly high number on SIP closures. In fact, at an all-time high number on net on the SIP closures and a very low number on the net SIP figure. So that is one thing which I'm watching out for. Second, I think the sectoral shift is quite evident. I think that is for lack of new NFOs. Sectoral money was all being collected because of new NFOs and which were coming out, and I think that flow has now stopped a little, not completely stopped, but there are lesser new NFOs, so I think that flow will come out. And I want to see the tilt between the large, mid, and small as to how the money is getting allocated. That to me is a very key indicator of what the investor at large is thinking. So I think these are few data points which I'm keen to look at.
Large cap, there has been a little bit of flight to safety towards the large cap where there is relative value, because I think the large cap inflow number went up from 2 to 3,000 on a month-on-month basis, and that's a sharp near 50% jump that we've seen. Anthony, do stay on, Mohit. Anthony Heredia, Managing Director and CEO at Mahindra Manulife Mutual Fund, is now with us on the show. Thank you very much for joining in. We were just chatting with Mohit, and he's pleasantly surprised by the resilience of the net equity inflows despite the market turbulence. But what's happened in the month of February, particularly the last couple of days, the savage, brutal fall has really shaken a lot of retail investors more than the kind of volatility that we had in the month of January. So first, your comments on the numbers, any trends, any thoughts on them, and plus, what do you expect going forward in the month of Feb?
Yeah, hi, thanks, Reema. No, so I think the January numbers, I was expecting to come in broadly at these levels, because even for us, the flows were pretty much similar to December and November. I have to say, however, in the last 15 or 20 days, I would say sentiment has definitely changed a lot more. My view is, I don't think the flow pattern will change significantly, but I would believe there will be a larger shift as you see the next few months fold out into flexi cap, multi-cap, multi-asset, and hybrid. I think the dominance that you saw in the last 1 year in terms of thematic small and mid cap will give way to flexi, multi, and large. That is something that is clearly starting to play out over the months of December and Jan, clearly playing out in Feb as well. And I think that will show up over the next 3 to 6 months.
Actually, any interest you're seeing as far as debt mutual funds too are concerned? You're speaking about multi-cap funds, so that gives the fund manager a lot more flexibility, right?
So debt, to be honest with you, ever since the tax law changes that happened 2.5 years ago, has been a difficult sell. Point number one. Point number two, you have to think about it. On one hand, you can't be saying we're at a peak of rates and rates are going to come off. The first thing I would do is lock it into fixed deposit and bank deposit rates then at this point, right? As first port of call. I think the answer for the industry will be hybrid. So I think multi-assets, and I've said this before on your show and multiple other occasions, I think multi-assets, which is a combination of fixed income, gold, and exposure to equity, is probably the best product at this point I can see for the next 6 to 9 months.
Thank you so much, Anthony, as well as Mohit, for joining us, giving us a quick take on the AMFI data numbers that have just come out, and quite encouraging despite the kind of market fall that we are seeing. Let's now take a short break. Up next, we'll discuss market fundamentals with Gurmeet Chadda.